Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's also Fed Day today. We got March 21st here, Wednesday here. Let's kind of jump into this because we got a bit to go over. But first, we'll start off with existing home sales that came out today for the month of February. So in January, we had 5.38 million. These are basically on pace for the year. Kind of get your average annual pace for the year, million for the month of January. And the forecast for February was supposed to go up a little bit to 5.4, and it came in at a whopping 5.54 million. So great overall number there. Went up month over month, 3%. Year over year, only up 1.1%. Why? Only 1.1%, primarily because we are at all-time lows in terms of inventory levels out there. Now, with the rising interest rates out there, Naro is also saying that it seems to be affecting some sellers' decisions about wanting to sell and buy another place with the higher rates. So that's also kind of leading to a little bit of a crunch. In the meantime, it's also because we still got a big demand for housing. It's also creating prices rising up. So the median home price came in at $241,700, and that's up 5.9% from last year. Now, of that number that came out here in month of February, of those transactions, only 29% were first-time home buyers, well off the average of 40%. So unfortunately, some the first-time home buyers seem to be squeezing out, maybe with the lack of inventory and trying to compete for those. You probably have people with money, more money down payments, are outbidding those folks. So unfortunately, they're being squeezed a little bit. Later today, around 11 o'clock Pacific Standard Time, we have the Fed will be wrapping up their two-day meeting here. They'll give their announcements. The big thing they're going to be looking for, we expect them to raise a quarter interest rate. They're going to be looking for any word changes on there, like for inflation, talk about inflation, job growth, and stuff. For inflation, they want to see if it changes, the transitory comment is changed, or if it remains. We've been hearing that word for about, again, for the past decade, and basically transitory is something that's temporary, and if it's going on for a decade, it's a lot more than transitory. Also, we are looking at, they want to take a look at the dot plot chart here. They want to look at see as to the Fed numbers forecast for 2018. Are we going to have 3 rate hikes, or are we going to have 4 rate hikes expected? So that's going to be that's going to play a major role as to where the market's going to dictate afterwards. So speaking of the markets, right now it's a little mixed. It started off all negative. Then the Nasdaq kind of moved up slightly in positive territory. S&P's kind of been going back and forth so far this morning. And so again, it's going to be a little bit tricky this morning until after the announcement, and then even afterwards get a little volatile after they try to read through there and decipher, interpret what they're talking about here. So just a little fair warning. Today is going to be a little pretty volatile day because they're really looking to see what the Fed says. Also, this will be the first announcement given by new Fed Chairman Powell coming in. So let's see how this is playing out in the bond market. Bond market is down a little bit further. We're down about 3 basis points. As you can see, it kind of tipped a little bit further. Yesterday, again, we went right towards the last few months of the day. We had a bit up downturn here, and we had a pricing for the worst. So basically, we were advising people to lock in yesterday due to a bit of more of a drop. It closed down to 23 basis points from where we were when we did this yesterday. We were down about 11 basis points. So that's a pretty big increase in terms of where pricing went. And then today we're down about 3 basis points. So again, just be cautious here. And then one of the big upticks is, we had yesterday we had the yields closed above the 25-day moving average, pretty convincing manner here. And this, which used to be a ceiling, now it's going to be a floor of support, and this can give us more room to go upwards. So when yields rising, that means bond prices are going to be pushed lower, and therefore rates will continue to rise. And right now we're just above the 2.90 range here in yields. So the good news about this is with the short-term rates going up a little bit after today, This will help keep us with that larger spread. So, we were concerned earlier on regards to the yield spread difference. So if we're going to have inverted curve or we're going to have a flat yield curve, this could help widen that a little bit to make it more difficult for that to reach. So we'll take a look at that later this week. I'll make sure to put this in the chart so you guys can view where we stand after the rate hike. Maybe around Friday we'll take care of that for you guys. But in the meantime, that pretty much wraps things up. Again, stay tuned on Twitter. I'll be updating on Twitter. So if you guys want to get more information, especially after the rate hike today, just go over to Twitter. You can find me at Mike Bjork, and I'll put my updates on Twitter today. All right, folks. You guys have a wonderful rest of your day. Thanks so much for watching, and we'll look forward to see you guys tomorrow. Bye bye.